Protests on the streets of Venezuela turning deadly after President Nicolas Maduro declares victory.
The violence on Sunday very real. The bomb went off near some motorcycle police, wounding several.
Election day clashes between protesters and police claiming at least 10 more lives.
This is Venezuela. It is located on the northern coast of South America, covering 900,000 square kilometers and is host to over 31 million people. Venezuela has the largest oil reserves in South America and holds the largest share of OPEC crude oil reserves at 24.8%. Venezuela's oil revenues are 95% of export earnings and is the linchpin of their economy. Venezuela is classified as a developing country. Its GDP per capita in 2013 equaled roughly $12,000 American dollars. As of 2017, Nicolas Maduro is Venezuela's president. He embarks on a more authoritarian agenda and is being met with violent opposition. Consequently, Venezuela is on the brink of slipping into civil war. Since Maduro's election, there has been a GDP decrease of around 35%. Important Hofstadter cultural dimensions to note are that Venezuelans are more concerned with short-term gain and enjoyment and are quite tolerant of class inequality. However, they go against the Latin American stereotype of not being hardworking. Corruption is rampant amongst government officials. Venezuelan elites trading currency on the black market is commonplace as they can abuse higher exchange rates to that of the population. Consequently, business productivity has declined dramatically as this money is not financing vital imports used in oil production. Also, sanctions have been recently imposed by the US and are planned to be extended to the oil industry, severely limiting its operations. This all results in a high-risk economic climate to any company seeking to enter Venezuela. A lack of government investment in other domestic industries has resulted in a severely underdeveloped supporting industry for oil extraction and refining. With inflation reaching 800% in 2016, 82% of Venezuelans live in poverty, diminishing domestic demand for oil. Important to note is that a third of all oil production is obliged to China under oil for loan deals. As a result, any competitor must operate within tighter oil supplies. State oil company PDVSA operates as a monopoly in the industry. Their politicization in the 2000s enabled government to legislate on behalf of it, minimizing industry competition. Venezuela is ranked the second worst country resilient to supply chain disruptions. Due to major rioting, imports in 2016 have fallen to 18 billion, down from 66 billion in 2012, resulting in 3 out of 4 refineries operating at record low levels due to a shortage of spare parts and equipment. Furthermore, only 4% of Venezuela's GDP is being spent on infrastructure. Such poor infrastructure makes it harder for foreign direct investments to occur.
Esto está cada día peor, mi querido. Si este hombre no se va, aquí Venezuela, bueno, ya. Una guerra. Una guerra aquí. Aquí lo que hay es guerra, una guerra.